Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for August 23rd of 2020. We're going to go through our usual agenda with a slight change. You'll notice that some of the charts are going to be weeklies instead of dailies as we try to look for those longer running trends. Otherwise, we're going to be looking at the prior week's results for currency strength meter, fundamental announcements, the charts, as I mentioned, any setups we see in progress, a few words in conclusion. Starting with the ledgers, our results for the prior week, our long-term account has been really shining. We're up more than 10% on realized gains for the week, so several longer running trades did take us out at profit as we saw some retraces begin, and we also entered a couple of new trades just to continue riding these trends. I do expect that some of these are going to be very, very long running trends as the market settles down and picks a direction on a couple of the major currencies. On the intermediate term, we were pretty flat for the week. We lost a couple of percentage points, but nothing too drastic. Of course, this account is in a steep drawdown right now, which again is normal. Trading does not always go in one direction, but that's why we trade the different time frames. Some of them are going to be profitable, some not, and usually the non-profitable do come back. And overall, we have some steady gains to show year over year. So again, be patient. This will come back. Short-term ledger, very, very flat, a 1% decrease on just a few trades, 4 trades, 2 of them at profit, 2 of them at a loss. The loss, very slight, $20 or so. So again, a reasonably flat week on the shorter-term accounts. Notes and opportunities for improvement. The week did go in all directions, which is usually not conducive to good results in the shorter time frames. In the long time frame, of course, you've seen what happened, so we're doing quite well there. We are seeing breakouts on the weekly charts, and we're going to look at a few of those as we go through the currency pairs. And the U.S. is having a summer of hate to counteract the summer of love we had back in the late 60s. We continue seeing rioting and, of course, the political unrest across the country. This has been pretty much blacked out in some fashion by the media. You're not seeing the whole picture, but again, we'll have to see how this plays out. But I would expect this unrest to continue at least through the election in November. Oil, silver, gold continue to hold on to gains, and in some even trend. Silver, of course, is in a huge breakout right now. And that's pretty much it. We'll go into our relative strength meter for the month and the week. If you focus on the columns to the extreme right, we can see that the big winner has been silver. It's up about 9% on the month. And while it had a very small gain last week, it was a gain nonetheless. USD Swiss was also a key mover, and in general, the dollar pairs did continue going into dollar weakness, though a lot of them did go sideways throughout the week. So we're still waiting for that next boost into, well, wherever the dollar is going to end up going. Fundamental announcements for the week. Nothing we're going to be trading live. The important thing happening this week is the Jackson Hole Symposium, which will be happening at Jackson Hole. And we don't trade that because it is just a long-running, hours-long each day event for 2 days. We will be having, of course, snippets of information coming out of this symposium, and we'll have to be very cognizant of that and make sure we're tracking the dollar accordingly. This symposium will be virtual this year on account of the coronavirus, so that's already been announced, and we'll have to see if there is any sort of live broadcast, or we're going to have the usual press conferences and press releases. But again, be very aware of this happening. That, of course, is going to be affecting the dollar to some degree. Other than that, there's nothing much going on in the calendar for the week, so no live trading of fundamentals in the next 7-day period. With that, we move on to the charts. Commodities, oil, we continue to see that holding on to its gains and even going a little bit deeper. So I think we crested at 43, 42 something before a slight downtick towards the end of the week. But again, we are at a higher high than at any point before early this year, the first quarter. So it looks like the oil recovery is continuing. Not too sure if it's going to go all the way to the top of the chart again, but it certainly seems to be wanting to hold on to these gains. Well, not gains, but recovery. So oil is having a nice bit of a boost. Euro, and this is the first of our weekly charts. I want to point out that a long running trend, you can't even see the beginning of that trend, is being broken right now. So we are at a significant crossroads for the euro dollar. And at this point, if that old trend holds as support, we may find this going up to highs it has not seen since back in 2017 when it was at 1.25. Currently about 700 pips below that. And again, it could easily break the top and keep going. Pound dollar, also a weekly chart and also a break of a very long running trend line from back in 2017. It broke it, then popped below. But again, we're seeing that upward pressure to break out to new highs as the dollar collapses. USDJPY, this one is a daily. There was nothing significant to show on the weekly, so we kept the daily on this one. It is looking nicely bearish. We've had or rather the yen has had a bit of a rough patch in the past month or so where it went contrarian to the market, actually went into dollar strength, yen weakness. No apparent reason other than that's what the market did. But it looks like the market is now wising up and going in the opposite direction. We have been trading this one very successfully on the long-term account, and we still have a trade open that was entered late last week. USDCAD, and we're back to weeklies here. We can see that it is at the outermost trend, a nice level of support, and it is in the process of being broken. If it does break, we have the opportunity for more than 1,000 pips if it goes all the way to the bottom. And of course, there's nothing preventing it from hitting the bottom and simply continuing down. USD Swiss also at a significant level of support not seen in the visible portion of this chart. So it's gone all the way back down to the low 90s, broken that. And well, there are no deeper reliable levels of support below the current one, even if we go out to the monthlies. So right now it's pretty much in uncharted territory, and there is every possibility that it will keep dropping. The Swiss being a safe haven currency, and while the dollar still holds its status as a reserve currency for the entire globe, there are very strong signs that this is starting to crumble. Aussie dollar, another one on the weekly where we can see it has broken, not as significant a trend on the short term as some of the other ones, though we can see the break of the longer running trend quite a while back in early this year. So we're still in the middle of that very significant break. It's broken another trend line, broken several levels of resistance, and it still has a long way to the top in excess of 1,000 pips. This is another one we're going to be trying to track all the way up, assuming it does continue the trend. Kiwi dollar, same thing, very long running trend in the process of being broken right now on the weekly. A trend that hasn't been reliably broken or even tested much since back in 2017. And another one that has in excess of 1,000 pips if it decides to go all the way back to the top. And if it doesn't, if we have a bounce towards the bottom, there's just as much opportunity there. So either way, if we see this trending, this is going to be a very good pair to trade. Aussie Canadian, back to dailies. It's gone a little bit sideways, bouncing between levels of resistance and support about 200 pips wide. It is at the top of the Ichimoku cloud, currently acting as support. And I'd be happy to trade this one in either direction. I just need the this currency pair to tell us which way it is trying to move. Euro Swiss is probably one of the more difficult charts right now to trade. It's in the middle of a wedge. It's been going in both directions with pretty much complete unreliability. Goes up one day, down the next. So we've been leaving this one alone. And even these movements aren't huge. We're talking 100 pips in either direction. So for longer term trading, this one simply is not doing it. Euro pound has gone sideways. We're in a our oldest running trend, a long on the euro pound on the intermediate term account. Currently carrying a bit of a loss, but not a big one. And as we can see on Friday, it came back in our direction, and that's what it's been doing for weeks now. It's going in both directions, but generally cleaving to that support resistance at the 90 level. And again, we're waiting for it to break in either direction. It looks very, very good for a long entry. At least the euro is not giving up. Well, the pound is battling out as well. But there is every chance that we will see a return to that long running trend line, which is all we're looking for out of that trade. EURJPY is testing support after doing quite a nice bit of a break following a trend line all the way up, making their highs. It has broken that trend line, but again, it is at support. I'd be willing to trade this one in either direction as well. Though, if you've been following me for a while, you know that I think that the yen is overdue for a strength play, in which case this one should go towards the bottom, or at least towards the Ichimoku cloud, which is a fair distance away. Either way, no matter what it does, if it breaks out in either direction, we will be taking the trade. Euro Canadian, pretty much the same thing. It is breaking a rather long running trend from the beginning of the year. Too soon to tell if this is a break or just a test. It only happened on Friday, so we'll have to wait to see how the week kicks off. And of course, it does have a couple of levels of very strong support underneath it, the horizontal as well as the cloud. So again, this one could go in either direction. The CAD is another currency I think is overdue for a little bit of strength, but that being said, the euro has also been trending very strongly. So this might be one that doesn't give us opportunities in either direction, rather goes sideways for a while. Time will tell. Pound JPY breaking out of a wedge, but doing so very sideways for the last 2 or 3 weeks, and entering yet another wedge, which the apex is pretty far away. So again, I'm waiting for a consistent move in either direction to take some trades here, though we have been making short-term profit on these moves. Aussie JPY is struggling to break the topmost level of resistance. We've been trying to trade it up. So long as support doesn't break, it's still going to be a reasonably good trade. And again, we're waiting for it to break in either direction. It is very difficult to tell which way it's going to break. We're just going to have to wait to see it happen. Euro New Zealand, we went short on the long-term account last week, trusting that level of resistance right above current price. And so far, it has been holding quite nicely. So that trade is carrying a small amount of profit, or maybe a small amount of loss. It was pretty much at break even as we closed out last week. And we are looking for a return to some lower levels of support, as the Kiwi New Zealand being one of the geographies that has been hit the least by the coronavirus. So their economy is pretty small, but it has been weathering the pandemic pretty well, which in turn bodes well for the currency itself. So too soon to tell which way it will play out, but longer term, I am more bearish than bullish on this pair. Pound Canadian going in both directions, as has been happening with the Canadian against other currencies. Had a very strong move on Friday. It dropped about 150 pips, but only just to the prior lows. So it really isn't breaking out in either direction and just staying inside a wedge. Another one that when I see a consistent break, that will be our signal to trade it. For now, we will be observing it or maybe trading it, but shorter term. Pound Swiss is our last chart, and it is almost perfectly flat. It really hasn't been doing much of anything for months now. So we'll just have to give it time. It looks like the pound and the Swiss are pretty evenly matched. Eventually, one of them will break, and then we trade it. But for now, it's just not giving us a signal in either direction. That is it for the chart setups we see in progress. No significant changes for the most. We have coronavirus, the pandemic as the key factor across all the currencies, all the geographies. The USD pairs, of course, are vulnerable not just to that, but to the general economy, the rioting, which I mentioned earlier, our election cycle. Presidential elections are in November. It looks like it's going to be a pretty contested race, and well, people are a little bit, I guess spirits are high. There's just been a lot of bad blood between the two sides, and that is not likely to change anytime soon. And all that does is add chaos to the economy, which of course is not good for the US dollar. And as mentioned during the announcements calendar, the Jackson Hole Symposium is this week, and it will be virtual, but it does bear watching as a lot of the announcements that come out of it yearly have the potential to significantly move the dollar. Everything else, other than the yen, which, as I mentioned, has started to trend back into strength, but not in any very forceful way. Everything else is still coronavirus related. And a few words in conclusion, as always, just to point out that summer is usually a very slow, stagnant, sideways, sluggish period in the markets, to the point where there's a lot of traders that pretty much take the time off during the summer. It's definitely been an interesting summer this year with everything going on. And again, it is an election year in the US, but it still has been a very slow market. We're seeing signs of that ending. And of course, I don't mean the weather. I mean, the markets are starting to wake up. We saw some of the imminent breakouts or actual breakouts happening already on the weekly charts in this session. The long-term account is spectacularly well, as would expect from that kind of market activity, and it is still the account most likely to benefit from these breakouts. And remember, trading successfully isn't a matter of winning every day, it's a matter of winning. You don't need to eke out profit every single day. It's what you do over time. So are you ready, guys? Fall is coming. That is going to be it for this start of week session. Any comments or questions from anyone? Okay, then thank you very much. We will be back tomorrow in our regular schedule. Thanks for being with us, and hope you have a rest of a great weekend. This is Andy Pedraza with Special Effects Academy signing out.